Who says there's no comedy in finance? The Mainstreet and institutional investors have been poking at the cryptocurrency space for hacks, crashes, market volatility, all in order to establish a narrative of vulnerability. And now the Fed, the main institutional player, the keystone figure of centralization, just crashed. Although we hope this won't impact regular users in a big way, and hopefully this will quickly be resolved, this is still a great example of karma at work. Centralization just took a big L, thus showing many people just how important decentralization is. So please sit back and grab a hot beverage as we will explain in simple terms why you should be excited about Bitcoin and what you should expect going forward. Number 1. Bitcoin is decentralized. Now, why is this important to you? What happened to the Fed is extremely unlikely to happen to Bitcoin. On the flip side, yes, there are scenarios that Bitcoin could be affected by outside info, but that should actually be treated as an advantage. It shows Bitcoin's not perfect, thus not too good to be true. Number 2, Bitcoin's fundamentals are intact. What does this mean? There are only 21 million Bitcoin in existence, and more of them are bought every single day, compared to the numbers of newly mined Bitcoins. Number 3, Bitcoin is monetary energy. It means it's a great way to not only store value, but also make great returns. And thus people can have a bank in cyberspace, to quote Michael Saylor, to store their funds. This allows individuals and businesses to not only have funds at the ready, but it annihilates a lot of logistical issues as well. Number 4, Bitcoin follows the network effect or Metcalfe's law. What this means is the more users there are on a network, the more valuable the network becomes. Number 5, institutions are coming. Institutional investors love regulation and transparency, and the more regulated Bitcoin will be, the more value major institutions will place in it, thus making Bitcoin less volatile of an asset. We could go on, but basically these are some of the most important reasons to be excited about Bitcoin and not to be scared of short-term dips and regulations. But now looking at the flip side of Bitcoin. It is a volatile asset and will remain volatile for quite some time, but that is due to high demand. People are taking profit along the way, and this can be regarded as a growing pain of a new asset class. Also, the physical infrastructure and safety components are still lagging. There are solutions that we won't promote on this podcast to store your cryptos in, like wallets, hard wallets, exchanges, etc., but all of them have inherent risks with them. You probably have heard the horror stories of millions worth of Bitcoin being lost or destroyed. And if one Redditor's story is true, he had his crypto address and keys eaten by termites. Thus, storing crypto in general is still not the most user-friendly experience. On the upside, these issues are being tackled at breakneck speed. And now it's a lot easier to get into crypto than even 3 years ago. It's an exciting time to be in crypto. It has its risks, but also great benefits if done right. For more news and developments in the crypto space, tune into our other episodes of The Flip Side of Crypto or head to our website at DailyCoin.com.